Depend a lot on what lesson the White House takes from these two setbacks. Obviously, the main reason both Mr. Kaine and Mr. Moore were forced to withdraw was that just a lot of baggage from their past, extremely negative. Well, in the case of Mr. Kaine, allegations of sexual harassment. In the case of Mr. Moore, a lot of very, impolitic comments about women coming back to haunt them. Interestingly, though, among the broader economic community, the Fed-watching community, the real issue was that they really weren't qualified to be Fed governors. They were deeply partisan people whose views on monetary policy weren't always coherent. Does the White House conclude that it's okay to nominate a partisan person who's not especially qualified so long as they don't have baggage? Or do they go back to the drawing board and use a formula that has worked so well to date, and they actually find people who are really qualified, like Chair Jay Powell, like Vice Chair Rich Clarida?
So in that, Peter, is what I was going to say, is to me, the main issue with them was that they were overtly political candidates, and that made people uncomfortable. So I'm sure there are plenty of people out there who ideologically fit what the president is looking for, but have the right pedigree, so to speak, and would be heard by their colleagues if they put on the board and might not be controversial to nominate.
Well, the pedigree I think the Fed needs is the non-PhD economist pedigree, to add some other opinions, add people that have been in business for a long time, add people that have actually dealt with banks, not from a regulatory standpoint, from a business standpoint, and actually got a loan from a bank, a business loan. So I think that's what they need. So while Kaine and Moore were not the right people, I think the theory, though, is correct in that let's get some non-PhD economists or more of them in the Fed.
Greg, any names come to mind, people who might fit this mold that we're talking about, bring ideological diversity to the existing Fed, but the point of view maybe that the administration is looking to advance?
Not offhand, but I would point out that President Trump did not pick either of these individuals because they're non-PhD economists with a heterodox point of view. He picked them because they were partisan supporters of his agenda, and that he was pretty confident they were going to vote for lower interest rates in the interest of getting him reelected. So the question is, when you go out and look for a new candidate, what is basically your main test? Is it you're going to vote for interest rates to help President Trump get elected, or you're going to bring a fresh point of view and you're going to allow that interesting and heterodox point of view to basically dictate your opinions and your input into the Fed, which actually could be quite valuable?
Well, and the interesting thing, this leads us right into the discussion about what happened yesterday. The Federal Reserve holding rates steady, but all of the discussion about rate cuts was not responded to by Chair Powell in a way that acknowledged it, Peter. He really said, we think that this low inflation is transitory, so to speak. The market sold off on that. They think maybe he's a little more hawkish than they had previously assumed. So what is the diagnosis right now for where interest rates should go in a strong growth but low inflation economy?
Well, on the inflation question, the Fed has sort of brainwashed everybody to look at one number, the PCE, the core PCE, and they've made that the worshiping at that altar, and sort of ignoring the CPI, ignoring, Powell talked about the Dallas Fed measure. Cleveland has one. The New York Fed has an inflation gauge. All the other inflation gauges are at or around 2%. Some are even above 2%. This PCE core is this outlier. So while the inflation trends have been moderating, there's no question, for everyone to just focus on this one number because the Fed told them to, he's basically saying, we're not just going to react because inflation fell 20 to 30 basis points in a couple of months.
I take your point, but Greg, there has been a low inflation trend, which is interesting, especially in the last year or two, as growth has started to pick up. That still remains something of a puzzle.
It has, but I think the chairman was pretty clear yesterday that there's a lot of transient factors going on, like asset management, which is going to be reversed, like airfares, which is going to be reversed, like the remeasuring of apparel prices, which is not going to be repeated. So I think it's quite correct, and I think that the problem for him was that if he had leaned into the idea we're going to cut rates soon because of this low inflation, it would have looked, number one, well, first of all, are you responding to the president's pressure? Number two, what if the numbers start firming up again in the next few months? But I think that he understands, he wasn't ready to share this yesterday, but he understands that there's a medium-term issue over the next year or two that they are unlikely to have sustained inflation over 2%. It may very well be sustained at below 2% because we'll get more of these transient and technical factors, and that may, in the fullness of time, merit an easier stance of policy.
Yeah, I know, Peter, you don't want to see it, but it
didn't work so well with the Bank of Japan and the ECB, desperate to get higher inflation. So it's proven that just lowering rates and doing more QE doesn't result in the higher inflation in the number that you choose to look at.